That's all I needed.
I think back to that Blindfold movie. What was it? Bird everywhere. Then it's like all these shows go viral. They're
Squid
everywhere.
Game.
Yeah, Squid Game. I mean, how did I even forget that? I mean, that thing was a monster. The thing was a monster in terms of success. And Netflix has taken over this space methodically, well executed in its approach. I've talked about and we've talked about it. I think we've been proven right now. These numbers may show whether or not that's the case, dollars and cents wise. But we said this idea that the password crackdown and the subsequent ad model wasn't going to be successful seemed a little bit far-fetched, given that you just tell people who aren't paying that they have to start paying. Certainly some of them were going to sign up, right?
I mean, you have to think that the people that are the loudest voices that are like, you know, we'll cripple your growth, Netflix, we're leaving your service. I mean, like,
but you were
go
never
ahead.
there to begin with. How can you leave something that you were never at? That's what I never made any sense.
You were never paying to begin with, and I know, because I wasn't paying to begin with, although something monumental has happened in my life where I've been recommended a few Netflix shows as of late, so I might actually re-sign up for Netflix.
And then you just binge them, and then the nice thing about streaming is you're not locked into these contracts.
Well, exactly, because I try to keep my ducks in a row. I'm not trying to sign up
Oh,
for
we did pull back to
streaming
support
services
on
because that
TKO.
Then you end up like me, and then you don't even know what you got.
Exactly, and I'm trying to cut down on my subscriptions, not increase them, but I might sign up for Netflix. Not related to the news they got today, but hey, I can respect the push here. Netflix striking a 10-year deal valued at more than $5 billion to become the new home of the wrestling show WWE Raw, and its biggest push yet into live streaming. So
Oh,
the deal
excuse
is
me.
pretty major as far as its live sports entertainment rights go, and it does show the migration of traditional cable programming into some non-traditional programming, like the way Netflix operates, what have you. But they did say that this deal will be effective January of 2025. It will give it exclusive rights to show that show in the U.S., as well as international distribution rights to Raw, as well as international rights to some of the other major WWE shows, SmackDown and NXT and WrestleMania, internationally speaking. Now, domestically, the rights look a little bit different here, but it does give them access to about 150 hours of content annually. Right now, we do know that NBC Universal's USA Network is the current right holder for Raw, with a 5-year deal that was valued at more than $1.3 billion. So this offered a pretty premium price tag for the entirety of WWE and the Raw franchise, what have you. But I think what's interesting about this is Netflix has been trying to push into sports. Whether it's been successful, whether it hasn't been, is your opinion. They did have that golf event, which I believe you mentioned earlier this year. They also do have, right now they're expecting to live stream a tennis match called the Netflix Slam in March. They have been also trying to push into Formula One, boxing, but this is the biggest deal they've had in the sports world, and I think that's pretty major for Netflix.
Totally agree. They have operated more in this niche space. You think F1, you think golf, you now think kind of wrestling, WWE. Very loyal fans, but smaller pieces of the pie in terms of overall viewers. But you'd have to wonder, how much is the WWE fan already a Netflix subscriber and vice versa? Is there opportunity there for them to get more subscribers this way? But I see this also as, this is just, in a way, kind of the trial run if they want to make a run down the line at things like the NFL. Amazon, of course, recently, moving into that for Thursday Night Football. I would say that there's been hiccups, but it's largely been a decent rollout. I don't know dollars and cents if it's made sense or not, but YouTube TV and it's moving to NFL Sunday Ticket. I think that's been a pretty robust success for YouTube TV and getting people onto that platform and the way that they've done it. For Netflix to step into the sports in general was the logical next step. but you can mess it up. It's the hardest thing that they've had to do. You're not creating the content and then publishing it. It happens all live, and there's a lot of, when you watch those NFL games, for example, it's like a zillion cameras. So a lot of things that they got to keep track of, no different for WWE, but partnering with an established brand and then just being the home of the broadcast makes a lot of sense.
Yeah, and
it makes a lot of sense.
A lot can go wrong. So there's that whole new ball game that you're dealing with. But what I think is really interesting about this deal, you made a really good point. And it's like, will you necessarily see huge subscriber growth? Probably not. But you will. Hopefully, I think the strategy is here to retain subscribers, because unfortunately, right now in the streaming environment, we are as.
How can I email this girl and ask her to be my trading partner?
Peacock to watch that one NFL game, I would be very quick to unsubscribe then. I think this is like retention that they need.
Yeah, retention, and what are you doing to your competitors? If you're extracting things that keep you subscribed to traditional cable or other streaming services, you put them on your platform.
Fat cats are back from lunch.
Prices, but there's nowhere else to go. If Netflix just becomes the cable, becomes where you watch everything, and then they embed ads, you can't leave because you're stuck there. That's where everything is. So you got to be careful. We got to be consumers. We got to be very, very, vigilant about these ads, and hopefully we still have these ad-free options going forward. But you can slowly but surely see this becoming cable.
And gosh, and I feel like the older and older I get, the less tolerance I have for these ads, because I'm like, I will pay an additional like $10, what have you, because I find the ads so irritating. They do a good job of that, actually.
Yeah, and it's one of those things where it's like, I just want the choice. Maybe in some cases the ad will make a lot of sense if I'm not super engaged to it, but if I want to be efficient, I want to be able to, if I have the extra few dollars a month, maybe I would use that. But this is sort of bearing the lead, because we got a huge event this afternoon on Netflix, which is going to put a lot of numbers to what we're talking about, which is how successful is this firm right now? Because huge comeback. We talked about the torture that was 2022, but 2023 was a lot of building back, kind of brick by brick, the damage that was done. We're basically now full circle. 505, 510 was sort of where we were before those just absolute meltdowns of quarters that began in essentially this quarter 2 years ago, consecutive quarters where the stock fell from about that 505 mark all the way down to 162 with very little stopping over that 6-month stretch, or really only about a 3-month stretch. So torturous time, but you can see working our way back, but nowhere near that 799 cents. It's like a price that you buy something store for, but nowhere near that all-time high yet.
There are like 3 companies where I can like feel in my soul those trading sessions after their earnings, and it's Target. There's a few Targets. It's also Snap, the day that Snap literally dragged on the entire market. And it's Netflix.
And Meta probably too.
And Meta too, I was going to say, and then maybe NVIDIA for the other reason. But this name has had volatile moves on the back of its earnings. It's since returned, like Alex said, it's returned to more normalized earnings reactions because we've seen subscriber growth return. But I'm always a little bit weary of the fact that if we see subscriber numbers really disappoint, we could be in for a major move just based on this stock historically speaking. So with all this in mind, trading this name ahead of their earnings today, you're right, we did bury the lead a little bit here, but I feel like we've discussed this name's earnings all day long on the network. So what are you thinking for an example trade?
Yeah, and that normalization, maybe we're not seeing 40% down moves around earnings, but I think the last one was like 15, 20% to the upside.
They're still big.
Oh, they're still beyond big. They're huge moves in this name. The market maker move was upwards of $40. So looking at that, it's a little under 10%. I looked at something that looks for a move towards that mark to the upside, but it isn't going to be hurt if it moves to the downside at all. So it's a skewed call butterfly. It's technically, Jenny, neutral to bearish, but it's omnidirectional. The best case scenario is a move higher. So it's one that looks for a move towards 525.
Oh boy.
In the way that we're constructing here, which is buying one of the 520 calls, all of this in this Friday's expiration, selling 2 of the 525s, and then buying one of the 537.5 calls to define the risk. So,
well, today was another episode of Jim selling too early. It seems like I was going to take a loss on this stock, SPY, today, but I said I'm not going to do it. I'm just going to go ahead and wait for that bottom and then add on for the final 3 times. And it seems like it never fails. If I sell for a loss, I'm a fool anymore. I'm just a fool. And I don't want to be that fool. So I got to go back and look at the chart and see what got me so shook up. And, I go back and I look at it. And it really wasn't that bad of a spot to take this entry at the bottom today. I mean, we're almost nailed that from yesterday's low. And if I just magnify this up a little bit and draw this trend line on the body of that candle, right there, and see if we touch that today, and look at that. I mean, right to the frickin' penny. All I had to do was just wait a little bit longer and see that double bottom. And I didn't wait, 'cause I didn't notice that. I just held on and bought the dip, bought this head and shoulders and added on to it. Then it comes up and it breaks out, and I get out of the trade and it pulls back again, and then boom, another inverse head and shoulders. Again, the bottom pattern, left shoulder, right shoulder, right shoulder, right shoulder. It never fails. The inverse head and shoulder never fails. So it was a double bottom. There's your left shoulder, your head, your right shoulder, your right shoulder, your right shoulder. I mean, it was long and winded, but it was perfect. To the penny. 428.29, using the body of that candle right there, tweezer bottom, where we had the 3 black crows yesterday and a big old fat hammer, and we took that. And I just go back and I look at it, I said, well, it made so much sense to just hold on and wait for that bottom. And you get down there and you're down 380 points, and you go, oh shoot, should I hold this?
As well as they saw more visitors pick up. But when you look at the share price action, it is up about 11% from that yearly intraday low, but it is falling around 25% from the yearly intraday high. It's off about 12% over the past 12 months, around 12%. And it recently had one price target cut from UBS. It cut the price target to $72 a share from $77, maintaining a buy rating, and one price target hike over at Deutsche Bank to $66 from $65 a share, maintaining a buy rating as well.
Yeah, and Renita, seeing a nice move to the upside today, obviously up almost 2%, but I've been waiting for the recovery of Macau, it feels like, for the last 3 years.
Yeah.
If there's still citing weakness, we've got some big problems here, and I'm sure
Here's a watch list for you.
Still grappling the effects of major lockdowns that weighed on it much longer than here in the United States, but I'm like, at this point, we have to see a recovery in Macau.
Call it
I'm
resorts.
sure investors are losing their patience, but we will leave it there. Really great breakdown on all things Las Vegas Sands ahead of those quarterly earnings. Renita Young, senior markets correspondent here for the network. Now, coming up next, another name we discuss very frequently on this show, and that's Coinbase, which got downgraded today. Things have been volatile ever since we did get some regulatory hurdles approved last week, so we'll discuss more of what that looks like and what this analyst thinks is negative on this name coming up next.
Yeah, Zona, I would have made another $570 on that trade.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had
I'm ready to have a divorce with you if you keep that volume down, buddy. Thanks for coming back, everybody on YouTube. Hit that like button. My platform just went. I had to reboot. Your calls on what? Oh man, you didn't get out when it popped? I'm gonna go get my tea going. I'll be right back. Okay, on the I'm not the best options trader. I mean, I don't know a lot about options, but I do know there's only one option I trade on the same day expiration, and that's the SPX. I won't trade anything else. Nothing on the same day expiration. I think that could cause a catastrophe. A lot of traders I know do it, but I've never been successful at doing it. They deteriorate too fast. And if I'm trading and if I'm in a stock and it's a weekly, it's only for a day trade and a scalp. I won't swing even a weekly. I'll go out next week and swing that if I was going to swing it overnight or something like that. But I find it very hard to trade. I've lost a lot of money trading same day expiration on anything. I've learned that real fast because they don't last very long. The only one I trade is the SPX. So I hope that helps anybody else when they, especially a beginner, and if if you can't sit down and be around that trade. If you're trading a SPY for the next day, I probably wouldn't trade it. I'd go out the next week if I knew I was at a good support. So I'm sorry to hear you take that loss. But I think I've said that a few times about that. I just can't, I've lost too many on the same day expiration, especially the SPY. Or anything. Tesla, I'll do it the same week, but I'm gonna day trade it or scalp it. I ain't gonna swing it even on the same week. If it's a weekly, through my experience, I don't know if it's different with anybody else, but 484.12. That's your next resistance. 484.10. Now you got a 1, 2, 3 here. Are you on mic? No. I'm going to send you a chart. You got to break this 1, 2, 3. And we've done that. So your next resistance is going to be right up here. Right around 484.11. And if you break that, we'll go to the upside. But this is on the 5-minute. As a beginner, I want you to start trading the 5-minute. Do you see the chart pattern there? You got a head and shoulders. And that shoulder line is going to be your new resistance. You got to hold up the 9 here. You want to bounce off the 50 and stay above the 50 to stay bullish right here. Right now you're bearish because you're under the 9, so we got to bust past the 9. That's on the 1 minute. If it gains respect above the 9, I think we can break it to that 484.11. Now we did hit it almost. No, it didn't hit 3.
Available anytime, anywhere, on any device for free.
Reconnecting successful. So resistance, if you look at the 5-minute on the SPY, you can see it consolidating right up in here. This is a head and shoulders. It's your left shoulder and your right shoulder. So if it comes back to that resistance level, that shoulder line now becomes resistance. And you're close to it. And it can easily come back down one more time and hit this head and shoulders. You got your left shoulder, your right shoulder. This is called a hangman. Hangman candlestick. A hanging man candlestick occurs during an uptrend and warns the prices may start falling. The candle is composed of small real body, a long lower shadow, and a little more of the upper shadow. Little or no upper shadow. The hanging man shows a selling interest is starting to increase. As long as we stay above 483.91, we're still bullish, or the 9. But these are indecisive candles right showing right now. I gotta get some more water. Like I said, I'm not very experienced at option traders, but what I do know is I don't trade the same day unless it's the SPX. That's my number one rule. And spotting these candlesticks can tell you when we're thinking about pulling back. Now we're going to hold the 9 and run back up, or we're just going to continue down to the 200. And that's going to be the shoulder line of this inverse head and shoulders. Damn, this thing stopped on me again. Unbelievable. Huh. Jesus. Just having one heck of a day here. This platform froze up again. God. Huh. This is my battery in my thing.
I know I do.
Huh. Hello. Don't know what to think about this. I'm gonna shut it. I can't shut it down without shutting the computer down. You two what? You haven't... Oh, you hate to see people lose money? Well, I'm going to shut it down again. This is twice now. I don't know what's going on. Unless I got it overboarded. My opinion on Tesla earnings, I think the fat cats don't like it because he's cutting prices to make it more affordable for the middle class. I like the idea because they're making it affordable to the middle class. There's a lot of negativity right now in the wintertime because these EV cars ain't charging. The charging stations, like 1 out of every 4 of them are bad, and people having to wait to charge up their car. And there's just a lot of negativities going behind all these. General Motors can't handle it. Ford can't handle it. Tesla will always be number one. I think they're going to gripe about the margins. Now, I'm bullish on Tesla, but I can't pull up my chart right now. My platform's frozen again. So I'm going to shut things back down. What I think of earnings is I think it's same as everything else, but it's just coming at a raw time where there's a lot of negativity right now with the EV car sector because they're not keeping the charge in the wintertime. People are too dependent. I think they're made for in town only. They're not made for cruising the highway or anything like that. We've thrown way too much money into it. Anytime the government gets involved in something, it screws it up. So they should have let the private sector worry about it and figure it out, and they did not do that. Biden came in and wanted to be a warlord of the EV car sector, and it just, I mean, he's the dumbest senator that they've ever had, and then he turned around and make him president. So I put a lot of blame on Biden because this big push. You don't ever, when you start a new business, you don't ever want to rush things. You got to let it kind of pan out. I've had a lot of businesses. It takes like 4 or 5 years before you can even start to make money in a business. And it's not going to happen overnight. And then you got to worry about the regulations and all this stuff. And I just think it's too big of a push. And it's got everybody kind of in a frenzy. Now, I'm bullish on Tesla. As long as we stay above that 195 to 200, it can pull back some more. I can't see my chart right now because this thing's frozen on me. And I have to shut it down for it to work. I don't know what's going on. I think it might just be my solid support's been 206, 207. I'll tell you that right now. If that holds, it'll be good. Now, I think it's sell into the news kind of deal because we've pulled back so much. You look at the daily chart, we've had 3 straight weeks of consolidation to support. Same way we had 3 good weeks of running up. Elon wanting to get a piece of the steak and be part of the board so he can have some say is a big deal. But Wall Street can't stand this company. I don't understand why. I know why, because he's not into the swamp. So we're fighting them fat cats. If we were like in the spring or in the summer, I'd be gun-ho to take this trade and run it and swing it into earnings. But not this cold weather, this cold streak has caused that's negativity about it. And the bears are piling on it. So I think it's more bearish right now than it is bullish until the earnings come out. And then once the earnings come out, I think we're going to see a nice little pop. But we've got China. China is a big deterrent right now. And Tesla's built that plant in China. And that's another wrench in the spokes. He did that because he wanted to get that population, start selling them cars over there. I think you'll get a good pop on it if you hear something about China wanting to stimulate the EV sector over there. So I'd wait until after earnings. And if it does dip due to earnings, that's when you want to buy the trade. I'm not going to trade it until after earnings. I don't want to take the risk. I'm going to shut this thing back down again. Did you hear me, Elka? Alakalka. Are you from Hawaii? That looks like a Hawaiian name. I had a hardest time pronouncing people's names over there because their vowels are different. So I wouldn't rush into the trade. I'd trade it off the results. Earnings haven't been very good all around. Everything's dipped on the earnings. Hardly a few of them have bounced. But I don't think it's going to have anything to say about the market. There's just too much momentum right now. And tech is way overbought, but the only one saying that's Schwab. You get mixed messages big time on CNBC. But these guys on Schwab, they know what they're doing. So I'm going to shut this back down again. I'm having platform issues today. You're from Germany. All right. I love the German people. My sister went there this year. Or last year. Meant last year. Sorry, YouTubers, but I got to shut this down again.